Hi, this is Michael Devlin with the Michael Devlin Group, and this is a quick Santa Clara County real estate report for May of 2020. You might have guessed that sales in May of 2020 were down year over year from 2019 due to the whole virus thing, sheltering in place. We only were allowed to show property under certain circumstances. There's no open houses. The market went down quite a bit. The single family homes in May, the number of sales was 492, which is 571 fewer than we had last year, or a 54% decline in the number of sales of single family homes. Across the board, townhomes, condos, single family homes, total sales are down 57% year over year. However, an interesting sidelight is that prices have not fallen as well. In fact, single-family homes and townhomes actually are at a higher median price in May of 2020 than they were in May of 2019. What we're seeing is sellers aren't necessarily just lowering their price, they're hanging on, they're taking their homes off the market, waiting for things to get back a little bit closer to normal. In terms of the list to sales price ratio, what that looks at is if my house is listed for $1 million and I get 950, obviously I got less than 100%. If I got 1,050,050, obviously I got more. So in a normal, regular market, not like the one that we have now, but not even like the one we have in Silicon Valley in the last 5 years, normally sellers don't get 100% of what they want. But we're in Silicon Valley. Last year in 2019, sellers on average got 102%, whereas in 2020, they only got a little over 100%. Now, even though that is down year over year, getting 99 to 100% or over 100% of what you're asking for when you sell your home, that's still a seller's market. The dollars per square foot, which is another way of looking at what's happening with prices, because the median price is simply the price in the middle. That can go up or down just depending upon how many high-end homes are selling, that sort of thing. But looking at dollars per square foot, even then, single-family homes are up 2% year over year. Months of inventory. In a classic or normal way of identifying months, let me just say this. A month of inventory mean if we took all of the inventory we currently have on the market, we look at how many sales we've had in the last 30 days, and we divide how many months of inventory do we have if we stopped adding things to the market and just sold things at the rate we have in the last 30 days. Now, there's differences of opinion as to what makes a market a buyer's market or a seller's market. Some people think that it's not even normal until you have 6 months of inventory. My experience in Silicon Valley is that that number is closer to 4. When we get to 4 or 5 or 6 months of inventory is when you start to see the market really shifting to a buyer's market. Right now, for single-family homes, there's 2.2 months of inventory. Condominiums has the most inventory, but that's still under 4 months. We're in still a seller's market. How many active listings do we have? That's the number that's really been dropping. We've got a stifling, if you will, of inventory. And you can see that over almost 40% down in terms of the number of active listings on the market in May of 2020 compared to May of 2019. People were waiting, right, for the shelter in place and all of those things to maybe blow over and become closer to normal. What is projected for the Bay Area post-pandemic? Rates will soften. That's already happening. Already rates in the Bay Area for rent is going down. Housing prices may not go down. In the past 5 recessions that we've had, in 3 of them, prices went up. And this is different from ones that we've had in the past. There's some indication that because of the supply and demand issues, prices are not going to drop. But income inequality may grow. People are losing their jobs, they're losing part-time jobs, there's a greater inequality between the people that are making a lot of money at some of the tech firms versus some of the people that are working in Silicon Valley. New construction will probably slow. As builders become more concerned about the health of the market, they stop initiating building projects. The Bay Area is likely to recover more quickly than other areas in the United States. The question for us sometimes is how is Apple doing? How is Google doing? How is Cisco doing? How are the tech companies doing? And if they're doing well, then our economy is doing well. This will be a good time for investors, at least in the short term. Whether or not prices have dropped or not, you may start to see properties coming on the market that are in default or in pre-foreclosure, some sort of a distressed kind of a sale. And it's not just the big investors that may be able to cash in. Even if you're a small investor, particularly if you have cash, now is the time when you can actually get some bargains, right? Prices overall aren't falling, aren't dropping, but there are bargains for investors that have cash. What's happening with the virus period and the real estate market? Jordan Levine, who's the deputy chief economist with the California Association of Realtors, believes that the housing market bottom has already appeared, and with the economy reopening and more people going back to work, there still may be disillusionment and unemployment for a while, but there's optimism, right, that a vaccine may be available by 2021, and a video report that he put out. In the next 5 to 6 weeks may be tough, but the second quarter should be down about 30% overall, but many economists are predicting the possibility of a rebound in the fall and the market to pick up. If you're thinking of buying, even though inventory is lower now, there's also fewer buyers, less competition. If you're thinking of selling and you're thinking maybe I should wait for all of this to blow over, well, there'll also be more competition. Right now, the people that are in the market are serious sellers and serious buyers, and we're still selling homes. Well, that's what I look like. My name is Michael Devlin. I run the Michael Devlin Group. If you're interested in buying, selling, or investing in real estate, and you'd like to get some ideas on how to get the best deal when you're doing that in the market that we're in today, reach out to me. I would love to talk to you.